If I woke up tomorrow with only $500 in my bank account and had to start all over with trading, I would do it completely different than most beginners they do. You see, most people, they blow their accounts, their prop firm challenges. They jump from strategy to strategy, they copy signals, and they waste years doing random shit until they finally quit. So here's the reset button that would have saved me 1.5 years in failures and over $43,000 in deficit. The exact roadmap I'd follow step by step so you don't have to waste your money and your time just like I did. Alright, so let's just start with step 1. Mindset before money. Trading is a skill game first and a money game second. Your $500 doesn't matter if you don't have skills. This is where most people get it wrong. They start out by looking at YouTube, finding a pattern, finding some kind of strategy, then they try it out for themselves, they see it works, and they put the money into a broker or into a prop firm, and then they try to flip it. They try to make it into 2,000, into 5,000, into 10,000, into 20,000, because they see so many YouTubers doing it, and they think that they're just following a specific pattern. And this is a wrong way to go, because you will lose your money, and then that will lead you into a vicious cycle where you're literally scouring the internet for information every time that you lose 1, 2, or 3, or 4 times in a row. And that's not the way to do it, because losses is a part of the game. You just have to figure out a strategy where you win more than you lose. This is what I'll give you. But before we get into that, the first focus of yours should be learning how to not lose money first. And we do that through risk management, and we do this through consistency with this risk management. So for risk management, we use a stop loss and we calculate our position size, and that's what we stick to. Most people, they never put a specific stop loss, and if they do, they tend to move it because the trade needs a little more room. And it's very important that you guys keep your risk uniform so you always risk the same thing, and always, when you're wrong, loses the exact same amount. And I'll go more into that with this later. Step 2, we have to choose one market to focus on. You see, beginners, they chase gold, forex, crypto, indices all at once. They treat trading like a hobby and spread themselves thin. Think about it for a second. You might like to play soccer, bike, go to the gym, ski, play video games, and so on. Ask yourself this question: have I ever made any money from any of my hobbies? No, you've spent money on them. You need soccer shoes, you need to rent skis, you need to buy the computer games, you need to buy the computer, and so on. And the only way that you could make money playing computer games or playing soccer or skiing, if that is your focus. So trading all of these markets is the exact same as utilizing all the hobbies that you like. Keep in mind, they essentially move in the same patterns, but they all have a different personality. They all move a little bit different to each other. One strategy in gold does not work on EURUSD. And we have a little picture of Cristiano Ronaldo here, because he's good at soccer. So what we have to do instead is we have to treat trading like a business. So first up, I'd pick one pair, one market, and here we want high volatility, high liquidity, and volume. The reason why we want all of this is because our strategies does not work if there's no volatility, if there's no liquidity, and if there's no volume. So EURUSD is one of the most traded, NASDAQ is one of the most traded, gold is one of the most traded. I trade gold myself because the market structure is just so damn good. Why should I only pick one, you might ask? Well, like I covered before, it is spreading yourself thin looking at all of it. But you have to get familiar with the structure, the personality, and the volatility. If you are sitting on 8 different things, you have to reanalyze all the time. Like, you don't have a strategy for all of it. You're not even profitable yet. So pick one pair, learn the personality, learn the structure, learn the volatility, and then start working from there. We have to keep it simple because you need clarity. You need to figure out where it goes right and where it goes wrong. And you can't do that if you're trading 8 different things using 15 different strategies and 20 different indicators. And this moves me to step 3. You have to learn the market structure, not indicators. You probably don't know what half of your indicators they mean, or how the math within them works. And all you literally need in order to succeed in trading is the market structure and then using price action. So right here are some different points of interest that marks out price action pretty well. We have a support and resistance zone right here. It stretches all the way through. Look at how price is reacting to this support. We're jumping off, then we're breaking through, then we're coming up again, and then we're going down from here. Further on, we have a supply zone right here. When the price moved up to the supply zone, we dropped. We have a fair value gap right here. When the price moved up to this fair value gap, we dropped. When the price came to this demand zone right here, we rose. This is just some of the points of interest, some of the things that you need to learn. I'm just going through it loosely here, but this is essentially all that you need in order to succeed. Next up, you need to know what liquidity zones are. You need to know what liquidity is. And liquidity, let me give you a little example. Liquidity is straight up orders. How many buyers, how many sellers in the market? The more of each, the more liquidity. So right here to the left, you see a liquidity zone. We got swept the liquidity right there, and then we rose to the top. Liquidity exists outside of market structure. And a good rule of thumb is that the market always moves for liquidity. Then you need to know about trends, because the trend is your friend. You don't need anything else of what I'm showing you here. If you combine trends with liquidity, with price action, you are able to create a profitable strategy. And if you just keep it simple, you will have clarity on what goes right and what goes wrong, and then you will have much easier with the next steps. Furthermore, you have to know about ranges. Why is the price moving sideways within this specific range? Give you a little teaser. It is because people don't know where the price will go, and therefore they're not putting money into the market. As soon as the price breaks through the zone, mass human psychology steps into place, and that will trigger another trend to the upside or downside depending on the break. And again, this is not an absolute. We are dealing with probabilities here. You just need a higher probability and then enough trades to actually play out this probability. I'll show you how you do that in a second. Keep in mind, I wouldn't waste time with MACD, RSI, stochastics, etc. It is making it way more complicated, and you don't need complicated, you need simplicity. And next, I'm not selling you anything. I just want to show you that my student Mark crossed $100,000 in profit over the last 3 months, and he's been trading with me for 12. And all Mark uses is price action and supply and demand. That is literally it. And then he's trading up on gold. So looking at that one pair that you've chosen, you have to learn where and how price moves, why there's a higher probability of a reversal, where liquidity pools sit, because the market moves towards liquidity. And it moves towards liquidity, grabs the liquidity, and then continues the other way. Step 4, you start with something called demo trading and data gathering. Most people, they trade. They trade demo accounts, they trade live accounts, they trade prop firms, but they're never actually gathering any data. And data is the only thing that you should rely on in trading, because that is where that you'll figure out whether or not you have a mathematical edge. If you don't have data to rely on, you're trading purely with hope. So what you can do is you can open a demo account on MetaTrader 5. You can download it on App Store or Google Play. And then when you open up the app, it will create a demo account for you like that. So you should spend the first month doing backtesting. And here you have a screenshot of TradingView where there's a replay button. This makes it available for you to go back in time and actually play out the price action and test out your strategy. And then you'll have a chart that looks like this, because you have been going through time and you have been executing on some specific rule sets that you have made for yourself. And then you're actually testing this out, because trading is so wonderful, because you get the possibility of testing out your business before actually putting any money into it. And most people, they do the other way around. They put money into it, they lose, they put money into it, they lose, and they start treating it like gambling instead of like an actual business. But here you have the opportunity to figure out whether your business works or not. That is beautiful with trading, but I'll warn you, it's a bit boring work, and most people don't like boring. They like the adrenaline rush. And if you're in it for the adrenaline rush, you will lose a lot of money. So you have to watch price action here. You have to become familiar with your instrument. You have to become familiar with the personality, with how the market moves, with that one pair or indice or crypto or whatever that you choose. And it is very important that you track everything in a sheet or in a Notion, so you have a place where you can look at your data. And if you guys want my personal sheet and Notion tracker, just comment tracker down below and I'll send you a link that works once. So this is my sheet tracker and this is my Notion tracker. Your focus is this: can I follow a process for 30 days without breaking my rules? Step 5, you have to build one simple strategy. Let me give you one setup that makes sense. A liquidity grab, a break and retest, a simple trend continuation, 1-to-1 risk to reward, entry at retest on equilibrium. And that could look like this. You get the liquidity grab right here. You get the break of the earlier structure right here, as well as here. This is the high that breaks the earlier structure, and this is equilibrium, which is in the middle of the move breaking the structure. And in TradingView, you can use a tool called a Gantt box or a Fibonacci to figure out where the 50% is in the move. So what you'd have to do is you have to test it, refine it, and trade it 100 times before adding real risk. Why 100? Well, 100 is the minimum of actually playing out the probability in your favor. If you're doing it with 5, 10, or 15 times, well, you're not gonna be able to play out the probability. Because if you take a coin and you flip that 10 times, you can get hit 8 times and tails 2 times, even though that you have a 50% chance of hitting either heads or tails. But if you flip a coin 100 times, you most likely get 49 hits and 51 tails. So you have to have 100 trades, preferably more. And this is where that you can figure out whether or not you have a mathematical edge. Step 6, start risking small, even on $500. Risk 1% per trade. And you have to accept that it's about survival first. You have to prove to yourself that you actually have a profitable business before you go out and you spend real money and before you scale it up. Because if you start scaling without actually having an edge in the market, you will lose money because you are trading on hope and not data. The goal is to build discipline and data, not flip the $500 fast. And in part 2 of this video, I will go deeper into this and show you how you can get access to way more capital. Step 7, track everything. Wins, losses, screenshots, why you entered, emotions, Data is king, and if you don't have data, you're never going to go anywhere in trading. And you have to learn from every mistake. Hormozi says intelligence equals speed of learning, learning equals new behavior under same condition, which means how quickly you're able to change what you do when you see the same thing determines how smart you are. Because if you go into trading, you lose 10 times in a row and then you try a new strategy, you have not learned anything. You're just trying new stuff out. You keep repeating this vicious cycle until you eventually start giving up. You have to remember that journaling is way more valuable than winning at this stage. Step 8, super simple, invest in more education, maybe fund the account a bit more, get a mentorship. You can always learn from some people that are way better than you. And if I have one suggestion there, don't go to a free trading group. Don't go to a copy trader. These guys are just here to make money from you, and they make a bunch of money referring you to brokers to copy their signals, which is usually a guy just sitting in India spraying them out. So then you can go and take a funded challenge, but only if you have a mathematically edge. Most people that take on funded accounts, they do exactly what the prop firms want them to do. They go get a funded account without actually proving to themselves that they have a mathematical edge and that their strategy works over time. Then they go get an account, they lose their account, they get addicted to it, get another one and another one and another one. And then this prop firm is just cashing in because that guy just keeps going in a vicious loop. So only if you have a mathematical edge, you can go take a funded challenge. Step 9, play the long game. Accept that you won't get rich this year. Focus on consistency, process, and small improvements. If you chase the money will never come to you. But if you stop chasing them and focus on what you need to do instead of what you need to make, then the money will start knocking. So set process-based goals for every day, not profit-based goals, and you will succeed. So I will make a more in-depth video of how you actually implement this and what to focus on when you're doing each individual step. It will be uploaded next Sunday, so make sure to subscribe and turn on notifications so you don't miss it. And I also have a lot more videos on my channel going into depth with trading, into how I trade, etc. And there's so much more coming. I'll see you guys in the next one. Peace.